Good afternoon, ladies and gentlemen. My name is Michalis, and I'm the market analyst here at HF Markets. And I'd like to welcome everybody to a very unique webinar. Now, today I'm saying it's a unique webinar because we're not going to be looking at presentations, we're not going to be looking at theories. Today's educational webinar is actually a live stream webinar, and we're looking at the live release of a significant economic event, which is going to be creating a lot of volatility, generally speaking, around multiple assets. This is, of course, including assets which are not based in the United States of America, including some commodities. But of course, we're going to see a lot of volatility where assets are correlated or indirectly correlated, inversely correlated with the US dollar and, of course, the US. So today we're going to be focusing on the non-farm payroll figure and, generally speaking, the main economic data which is going to be released for the latest month. It's going to be mainly three economic releases. We are going to be at first looking at the non-farm payroll figure. The non-farm payroll figure is basically confirming how many more individuals are employed in the United States of America between when you're comparing the month of January to the month of February. So how many more employed individuals there has been from one month to the other. So for example, it is predicted, and we're going to actually start to look at the predictions as well. So bear with me, ladies and gentlemen. Let me get my predictions up on the screen. We're going to look at our economic calendar. There we go. So here we can see there is three major releases. Of course, there's other releases as well. We've got two members of the Federal Open Market Committee, which is speaking today. But the three major releases are going to be the non-farm payroll figure, which we can see here. It's also known as the NFP employment change. We are going to be looking at the average hourly earnings. And of course, we are going to be looking at the unemployment rate. Now, normally all are deemed to be extremely important. High price drivers causes a lot of volatility. However, at the moment, we've got the unemployment rate, which is deemed to be medium volatility. This is because the unemployment rate is predicted to remain at 3.7%. There's not been a lot of volatility for quite a few months now with the unemployment rate. It's actually remained at that 3.7% mark consecutively month over month for quite a while now. So this is why it's deemed to be medium volatility. Of course, we should keep in mind if we're going to get a big alteration, if we're going to see a different outcome, a very different outcome to that which is expected, as per the previous month, this month as well is expected to remain unchanged. If we do get something very different, of course, that can create a lot of volatility. And in 7 minutes' time, when the announcement is actually released, of course, we will look at that and what it means for the financial trading markets. Last month, of course, we looked at we had the same webinar. We also had Andrea, our other analyst, which also did analysis as well. And we looked at first what the event means, what is being released, and then we looked at what potentially does this mean for the financial trading market. So how will it influence the pricing of the assets? And in regards to this, we look at different factors. Now, if we're going to look at how this announcement is going to affect the US stock market, affect gold, affect other safe haven currencies, even assets which are indirectly influenced. For example, the Japanese yen is an asset which is indirectly influenced with the US dollar. Why? Because, of course, when we're looking at the safe haven category, we're looking at, for example, the US dollar, which is, of course, king. But we're also looking at gold. We're also looking at the Japanese yen. Some also take into consideration the Swiss franc, but to a lower percentage. So, of course, all of these safe haven assets are competing with each other for investments. So if one safe haven asset is underperforming, so for example, if we start to get underperformance and weaker US dollar, it can have a domino effect on the Japanese yen. Now, so far, The first thing I want to mention is we've seen a big surge in the Japanese yen. The Japanese yen has significantly increased in value this week. And of course, without a doubt, something which has definitely not failed to get people's attention is also the value of uh, gold. So if I actually go and put the MT5 up. Of course, we will look at fundamental analysis. We're kind of already speaking about fundamental analysis, but after the release, we'll look at fundamental analysis and then we will look at technical analysis as well. We're going to look at signals, we're going to look at indications, we're going to look at different theories and skills and what it can potentially be indicating to us. Now, if we look at gold, ladies and gentlemen, look at the price movement of gold. Now, we actually released on our YouTube channel a short, it's known as Shorts. It's a short video where it was released on the 6th of February, and we stated on the 6th of February certain reasons why potentially gold may increase in value. Yesterday, gold increased to the highest price it's ever been at. It's increased approximately just over 7% since the 6th of February. So you can see here, ladies and gentlemen, we want to provide as much information as possible. We always back up everything that we're saying. Everything, of course, is provided for educational material. Now, what I want people to point out to everybody is if we look at gold, ladies and gentlemen, gold has significantly increased in value. So, for example, this is a 2-hour chart. Even if we're only looking at the price movement of gold since the first of the month, ladies and gentlemen, even if we're not going to look at previous gains. So, for example, here we can see the price of gold from the first of the month. Look at this very strong upward price movement, ladies and gentlemen. Now, if we're going to look at if we're going to look at the Japanese yen, for example, so for the Japanese yen, we have the US dollar against Japanese yen here. Bear with me, ladies and gentlemen. If we look at the US dollar against Japanese yen, again, look at this significant decline in the US dollar against Japanese yen. So you can see there's been a lot of weakness in the US dollar, but not necessarily just weakness in the US dollar. Gold has been particularly very, very strong. The Japanese yen has been particularly very, very strong. So what we can see, ladies and gentlemen, is over the past few days, and generally speaking, in the short to medium term, in the past, we have seen that investors are mitigating and exposing themselves away from the US dollar. Now, what we're going to look today is to see if it's in any way can be related to actually what is going to be released. Because today we've got the non-farm payroll figure, we've got the average hourly earnings, and we also have the unemployment rate. Last month, all these figures were extremely strong. The unemployment rate remained very low. The average hourly earnings came in at 0.6%. So very, very high, ladies and gentlemen. The same thing applied to the non-farm payroll figure. The non-farm payroll was almost double that which was expected. But nonetheless, and we also keep in mind, we had 5 inflation releases. All 5 inflation releases were extremely high. 4 of them were actually higher than what was expected within the market. So you have to take into consideration that the data, ladies and gentlemen, has been strong, but nonetheless, the US dollar has been decreasing in value. So let's now look at what is actually going to be released in the market. We're going to look at the price reaction. We're going to see if we're going to continue to see a decline in the US dollar, or if we're actually going to see something, again, very strong, because economic data has weakened over the past month. We've seen high inflation, we've seen strong employment data, but if we look at consumer sentiment indexes, if we look at consumer confidence indexes, if we look at the PMI reports, both service and manufacturing PMI, also the gross domestic product, all of them were weaker than previous months and weaker than expected. So if we're going to get high, again, employment data, it's really going to calm those fears. Otherwise, ladies and gentlemen, we're looking at a scenario where actually the continuation of the decline in the US dollar may be possible. So this is, of course, something that we're going to take into consideration. So now it's 3:30. Let's see what is about to be released. If it's not updated in a couple of seconds, we can, of course, refresh the page. Bear with me, ladies and gentlemen. Let's have a quick refresh. Right, ladies and gentlemen. So here we've got the average hourly earnings. The average hourly earnings came in very low, ladies and gentlemen. This is actually something which is significantly negative for the US dollar. So keep in mind the average hourly earnings is massively related to the inflation rate. So if that, ladies and gentlemen, is extremely low, then potentially that alone can cause the US dollar to decline. If we look at the average hourly earnings on a yearly basis, it has also declined, where previously it was expected to read unchanged. If we look at the unemployment rate, ladies and gentlemen, the unemployment rate has increased to 3.9%. So remember what I stated, ladies and gentlemen. If we're going to see a very different announcement compared to that which was expected in the market. Don't forget, previously, if we go back 6 months ago, members of the Federal Open Market Committee were pinpointing that 4 to 4.5% can create a lot of weakness and negativity and can create lower consumer demand. If we get lower consumer demand, ladies and gentlemen, then of course it can trigger lower inflation. So they stated that 4 to 4.5% can be the region where it can prompt us potentially to look at lowering interest rates. And of course, as we have in the previous months, the non-farm payroll figure is extremely high. Was expected to come in at 200,000. If we're looking at those optimistic institutions which had higher expectations, such as, for example, Jeffries had higher expectations. They expected it to come in at 215,000. It's coming at 275. So that is extremely high, ladies and gentlemen. So, of course, that's positive. The non-farm payroll figure, which is actually the most important, is much higher than expected. It is positive. We cannot deny that. But something which is significantly important for inflation, and of course, everything about now is about tackling inflation, which has been stickier than expected. If we're gonna, take that into consideration, ladies and gentlemen, of course, we're looking at the average hourly earnings coming in lower than expected, and the yearly average hourly earnings lower than expected again. And also, in addition to that, the unemployment rate has come in extremely high. If we're looking at the unemployment rate, ladies and gentlemen, as well, uh, uh, we also can take into consideration that it is extremely low, and it is much lower than it has previously been over the past few months as well. Sorry, much higher than it previously has been over the past few months. Now, let's look at the US dollar index at first. So the US dollar index, ladies and gentlemen, is trading 0.11% lower. So the US dollar, ladies and gentlemen, at the moment is declining. So we can see what's having a very big effect on the market at the moment is the fact that the average hourly earnings were low. Not only were they lower than expected, but they were low. 0.1% is something where traditionally we were before we started to get very high inflation data. So, of course, we have to take into consideration that's very low. So we can see non-farm payroll has been less looked at. The average hourly earnings, though, and the unemployment rate has really caught investors' attention. So potentially this can actually trigger the continuation of the trend of the US dollar. Before we actually continue looking at fundamental analysis, let's actually look at the US dollar, and then we'll come back to the MT5. If we look at the US dollar is trading lower. We can see, even as I'm speaking now, over the past few seconds, we can see it is trading lower. We did get a decline, ladies and gentlemen. We got some upward price movement of 0.17%, downward price movement, though, of 0.5%. So we can see most price movement, most momentum is indicating downward price movement. But, ladies and gentlemen, we're going to come back to the US dollar. Here we can see it continues to decline. US dollars down, ladies and gentlemen. If we look as well at bond yields, here we can see bond yields. Let's go to today's chart. So we can see bond yields at first shot downwards, ladies and gentlemen. So we can see mainly momentum's downwards. It's kind of recovered at the moment. It's slightly lower now, but we've got a slight recovery, but definitely lower than the day's open as well. So we're trading 29 points lower. So the fact, ladies and gentlemen, that the US dollar is cheaper, and the fact that bond yields are lower is actually positive for the stock market. We'll look at the stock market in a moment because I can see some people indicating um, for example, some people are saying here what's going to happen to the US 100. Somebody's saying here what's going to happen to the NASDAQ. Nobody's actually mentioned gold. We are going to look at gold, of course, as well. This, ladies and gentlemen, is something which is extremely helpful for individuals who are trading the NASDAQ. This, ladies and gentlemen, I'll actually show you how to get access to this as well. If you just type in the NASDAQ components like this, and you click on the first website which appears, you will definitely be able to, it takes you straight to the page that we're looking at. Now, what is this exactly? This is basically giving you the most influential stocks within the NASDAQ, because everybody's aware that the NASDAQ has pulled many stocks, to be accurate, actually 101 stocks from the technology market within one price, one asset, one index. And of course, though, we have to take into consideration that it's priced using the weighted method. Now, what exactly does the weighted method mean? The weighted method basically means, it doesn't mean that there's 101 stocks, all of those stocks are equal. That is something extremely wrong, and you'll struggle to analyze and predict and determine how the NASDAQ is going to move if you're looking at analysis in that way. The NASDAQ is priced using the weighted method. So it means certain stocks are more influential. So you can see in this fourth row here, it actually says portfolio percentage, and it confirms within the portfolio, if you look at the NASDAQ as a portfolio for argument's sake, within that portfolio, it will show you the percentage which is made up by that stock. So that portfolio has 8.6% Microsoft stocks. But if you actually scroll downwards, it only has 1% of Amgen, 1% of Texas Instruments, 1% of Applied Materials, and so on and so forth. So it's actually showing you here, it's ranking the most influential stocks. Now, some people may say, how do I use that as part of my analysis? Well, there's different ways that you're going to use it as part of your analysis. We're starting here actually with fundamental analysis, and then we're going to go directly to technical analysis on the MT5. Now, there's different theories. Now, one theory, ladies and gentlemen, is that you can analyze alone the top 20 most influential stocks. So, for example, analyzing Alphabet and above. Of course, the top 10 most influential stocks are, of course, going to be the most influential, most important, create most of the volatility. Of course, we have to take that into consideration. This is why there is that theory. Another theory, though, ladies and gentlemen, is to analyze and take into consideration all stocks above 1%. So stocks which are exposed 1% and above. So that's taken into consideration the 24 most influential stocks. But that can change, ladies and gentlemen. So keep that in mind. Now, if we're going to look at the top 10 most influential stocks at the moment, we have 5 stocks, ladies and gentlemen. Actually, we're going to look at the top 11 because Alphabet is split up into 2. So if we look at the top 11 influential stocks, 5 of those stocks are declining. 6 of those stocks are increasing in value. So it's kind of 50-50, ladies and gentlemen. The asset which has seen the highest volatility, though, is a decline, and that's Costco, ladies and gentlemen. So based on that theory, based on that alone, we're looking at mean reversion potentially. We're looking at, for example, up and down price movement. Based on that if we're going to look at the top 24, so 1% and above, we've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 stocks increasing in value. So we've actually got less stocks increasing in value than stocks decreasing in value. So that is slightly indicating, again, mixed price movement, but more to the downward price movement. So yes, we've got a weaker US dollar, slightly retraced back upwards now. We are looking at lower bond yields, which is positive for the stock market. So we've got two factors here which are positive for the stock market, but nonetheless, we're actually looking at the stock market seeing more declines than the upward price movement when we look at the most influential stocks here. What we definitely will need to do, though, ladies and gentlemen, is in 15 minutes, we're actually going to get the stock market open. So as we over the next 14 minutes, 50 minutes, and the 30 minutes after the stock market opens, there'll be a lot of volatility. After the stock market opens for 30 minutes, that's going to be very important to re-look at this, because even as we're looking at this for 5 minutes and speaking about it for 5 minutes, and I'm uh, refreshing the screen, we can see that it is slightly changing. So, for example, Alphabet is actually now at neutral. Costco is still seeing a very strong decline, whereas these stocks here are seeing higher up price movements. So, if we look at the top 11 stocks at the moment, we now actually have two in neutral, six increasing in value, and three declining. So, we can see that's changing. What's going to be important is how it continues, of course, to change. So we're of course definitely going to take that into consideration. Now, when we're looking at the moment anyway, we're looking at the US dollar against Japanese yen. Remember what I said at the very beginning. This is why we have these webinars. Also, I've got somebody who says, can I have a list of beginner videos for my clients? Yes, let's come back to that at the end of the live stream though. Today we're looking at live analysis, so let's concentrate on that and then we'll come back to that in a moment. Remember what I said at the very beginning. I very clearly said if there is any sense, any sniff of weakness in the US dollar, we have to take into consideration, because everybody always looks at correlations, but very few people will look at indirect correlations. Unless we've got experienced traders, more institutional traders, traders which have a very strong background. For example, I was a financial advisor for almost 5 years in London. People with some experience will know that indirect correlation, a weaker US dollar can be actually triggering strength in the Japanese yen. We can see we've definitely seen decline in Japanese yen. I mean, when we looked at previously the US dollar against Japanese yen about 5 6 minutes ago, it was somewhere down here. So even as we spoke, ladies and gentlemen, it declined a further almost 0.30%. So even as we're speaking, probably a lot of people were hitting their take profits. Uh, Now, if we're going to look at technical analysis, I'm using this particular setup here, ladies and gentlemen. It's a 2 hour time frame. We've got a 75 bar exponential moving average. So you can see here, 75 is the period. So it's 75 bars, and the method is exponential. I've got that as green. Then I've got the relative strength index here as well on the 20 bar period. Keep in mind, it's not at its default at 14, it's at a 20 bar. Now, ladies and gentlemen, when we're looking at this, something which I will mention, and we mentioned this in our analysis blogs over the past few days. If we look at the price movement since the 5th of the month, so we're going back 3 days ago, we've been getting indications that the price is going to decline. Why? Because the price is trading below the 75 bar exponential moving average, and also below the 50 mark of the RSI. So, for example, here we were trading slightly below, ladies and gentlemen. We didn't get much downward price movement, but we have to take into consideration it didn't maintain downward price movement on the RSI. So the indication was very weak. Whereas now, ladies and gentlemen, we've definitely got downward price movement. We've got the price trading below the the price trading below the 75 bar exponential moving average, and we're definitely below the neutral on the RSI. So we've been getting indications of downward price movement. We've had a lot of downward price movement, and we actually uh, continue to get indications sellers were going to control the market up to a couple of hours, about approximately 4 hours ago. Why? Because at that moment, ladies and gentlemen, the price became oversold. Now, what does oversold mean? Oversold means it may slightly move sideways and lose momentum. It could indicate that the price is going to form a retracement before continuing its downward price movement. So we have to take into consideration the price is oversold. So this means there's a high risk that the US dollar may slightly increase in value, but doesn't indicate a different trend. It only indicates a retracement. Now, somebody's wondering where retracement can increase to. Something we can take into consideration is that it potentially can increase to at the 75 bar exponential moving average. Of course, as it starts to move up, the moving average will continue moving downwards temporarily. So that's one thing we can take into consideration. If not, we may see a weak retracement, which is at the 23.6 Fibonacci price. So that's at the 147 point 42 mark. Or we can see a strong retracement, which will actually go back to the previous breakout point as well, which is slightly higher at 149. Of course, if we get upward price movement, to be honest, in that range anyway, we're going to be hitting this moving average because this moving average will continue moving downwards. So if we are going to see a retracement, then this is the area potentially we may see a retracement in. Now, I'm not saying that for you to speculate against the trend, to trade against the trend. Keep in mind, there is certain risks if we're going to trade against the trend. Really, there's more benefits, especially for beginner traders, to trade in favor of the trend. A lot of people get into bad habits of if the price is high, they just speculate that it's going to decline because it's too high. If the price is low, they speculate that the price is going to increase in value. And people keep saying, the price is repetitive, you'll always return to its previous price, and so on and so forth. But the market doesn't work in that way, ladies and gentlemen. So keep in mind, there's certain reasons why people say don't fight the trend is your friend, and so on and so forth. So I'm not saying, it may retrace to this zone here for you to speculate upwards. Of course, there is options to speculate upwards, and you can do that. But if you want to continue trading and speculating against the US dollar in favor of the Japanese yen, the only thing I'm saying is, if it does retrace and it goes out to this area, then when it's in this area, keep in mind that potentially that's somewhere where the retracement will lose momentum and start moving downwards again, in which case there's opportunity to people to continue taking advantage of the downward trend at a more competitive price. Because some people think a retracement's negative. Retracements aren't necessarily negative. If it's retracing and it's not a change of trend, but an actual retracement, it's not an issue at all because the trend is going to continue if it's a retracement and not a correction or a change of trend. Retracements actually just provide the benefit of you being able to uh, enter the market at a more competitive price. Now, what do I mean by that? If somebody speculates in that the price is going to decline, would they have rather have traded at this yellow line here and speculated the decline there, or would they have rather speculated that the price was going to decline here? The answer would be the higher price. Why? Because it's a better entry point. For example, if somebody's looking to buy a house, let's say if we've got individual A, individual B. If individual A says, I bought a house at 100,000, and individual B says, I bought the same house at 95,000. Of course, you're going to prefer to be individual B. And the same thing applies when we're looking at technical analysis. So, ladies and gentlemen, that's the US against the Japanese yen. So if we switch actually onto other time frames, so let's go to the US dollar against Japanese yen again. The latest crossover is downward crossover. This is a 5-minute chart. We can see at this 5-minute chart, the latest crossover is downward. So you can see here a downward crossover that indicates downward price movement. We can definitely see on the MACD, we are seeing indications that the price is below neutral, so potentially that sellers are controlling the market. We can also see we're below the 50 and above the 25, so that's a positive indication of a potential decline as well. If we move on to the US dollar against Japanese yen and look at a regression channel, we can see the regression channel on the 30-minute time frame is pointing downwards. The regression channel is widening even before the announcement was made. It was previously widening. It's widening again. We've broken to a lower low and we are trading below the regression channel. So that's indicating again momentum in favor of the trend. Now, people are also mentioning quite a lot to me the Nasdaq. So let's start looking at the Nasdaq. Let's purely concentrate on technical analysis for the moment. If we look at technical analysis, this is a 2-hour chart again. We can potentially lower the RSI because we're looking at equities here. So, for example, you can lower it to 18, for example. If we are doing so, there's a couple of things for us to note. Number one, we're definitely seeing convergence at the moment. So far, we're looking at convergence on the RSI. So we can see a higher high and another higher high here. And we can see two higher highs as well. So that's positive. That does re-establish back up this upward price momentum. But we actually renewed to a higher high here for a second occasion. So you can see this is slightly higher. But when we're looking at the RSI, it's failed to increase to a higher high. But it's still very early on. This isn't necessarily something to cause concern at the moment. But if we do actually get the price increasing higher, so for example, if the price increases like this, ladies and gentlemen, but actually the RSI is still lower than the previous high, so this is the high. If it still remains lower, then that would indicate some concern, but that's not something which has currently happened in the market at the moment. The other thing for us, which is a slight concern as well, is that we're at a previous resistance point. We at the resistance point at the moment. This is the third occasion we've come to this resistance point. We went 1, 2, and now it's the third point. If we zoom out slightly, we can see if we previously were at this point. No, we weren't. So we can see this is a very early on in the resistance point. Because if we keep again and again and again testing that resistance point, then of course investors become more comfortable with that price. And there's a higher possibility of it breaking upwards. But if we very early on, then people still have a slight psychological sentiment against the price. So we have to take that into consideration. It's only the third occasion we've got to it. Only the second occasion we've maintained at that resistance point. So we have to be slightly cautious of that area. But though, ladies and gentlemen, on the positive side, the main indications are indicating upward price movement. We're definitely above the 75 bar exponential moving average. We crossed above it yesterday. After crossing above it, it's increased in value by 0.65%. We are trading very happily between the 50 and 75. We're currently at just over 63.5. So that's again indicating that buyers are controlling the market. So there's potential there, ladies and gentlemen, for us to switch over to a smaller time frame, because of course keep in mind derivatives are of course designed and mainly appropriate for short to medium term trading according to regulators. Now, we did get some resistance here. We cannot deny we got some resistance. The first reaction was pure panic. We could see the price straight away after the announcement just shot downwards like this, ladies and gentlemen, declined by 0.41%. Since then, it's increased by 0.40%, so it's still 50, even though individuals are seeing this upward price movement, even though we were getting indication of previous time frame and indicators here, that we're above the 75 bar, we're above the neutral on the RSI and on the oscillator. But here we've got 40% downwards, 40% upwards, so it's still 50-50 at the moment. Technically, we've got a lot of signals indicating upward price movement, but there's not only indications of upward price movement. For example, in the previous month when we were looking at our live analysis, there was all signals pointing in the same direction, no conflicting signals, and it was a lot easier for individuals to trade. And of course, as we analyzed the market and we gave some signals, the price did move in that direction. As it did with gold when we looked at it on the latest video as well, we just mentioned previously that we had a short for gold. We indicated in February 6th, that gold can potentially increase in value, and it definitely has increased in value. It's increased to its all-time high. Uh, but like I said here, indications are mainly upward indications. We're above the neutral on the MACD. We're above the neutral on the RSI. We've got an upward crossover on the crossovers as well. We're above the 75 bar. We're above the oscillator. All indications are buys, but there is some sign of weakness there. We've got 40% downwards, 40% upwards. So there is some slight concern there, ladies and gentlemen, some slight conflicts. If we're looking at the regression channel is quite thin. So again, there's a slight negative sign there. So not, for example, a regression channel like in this area here, where it's widening quite wide apart. We're actually seeing a regression channel quite thin. So we need to be slightly cautious there, ladies and gentlemen. But it is trading above the regression channel, which is positive momentum. And again, the latest crossover on the stochastic oscillator is an upward crossover. Now, of course, we can take into consideration, and I strongly tell people the benefits of this. We can keep monitoring this, ladies and gentlemen. For example, now if we're looking at the top most influential stocks, we have 1, 2, 3, 4, which are actually 3 which are decreasing in value. One is at neutral, and the rest are increasing in value. So you can see the stock market performance in when looking at individual stocks and the most influential stocks is actually improving. So this is also another positive factor, ladies and gentlemen. If we're looking at bond yields are down. That's positive for the stock market, but they're not lower than they previously were. They dropped, but they fully corrected now, ladies and gentlemen. So we can see we had a drop here, but it's very simply gone to that previous price. So it's low, which is positive for the stock market, but it's not maintaining lower price movement. If we're looking at the US dollar here, ladies and gentlemen, US dollar just keeps declining. So again, this is also positive for the stock market. So we can see there's a lot of positivity here, ladies and gentlemen. We are getting some conflicting signals, and I had mentioned a few of these conflicting signals. This can potentially actually be very positive for gold. So let's actually look at gold, ladies and gentlemen. We've got gold here at the very bottom. Let's start with the 2-hour chart. Actually, let's start with the 5-minute chart so we can get a better vision of the volatility. Gold saw a very strong upward price movement. It saw a very strong sell-off as well, so keep that in mind. It sold off downwards 0.68%, so that's a very strong sell-off. To be honest, the sell-off is understandable because the price just rose to an all-time high. It was very, very, very high. Let's double check it was an all-time high. Yes, it was. Uh, so we're probably increased to, for example, being plus 8% compared to previous price ranges. So of course it's understandable when you get to an all-time high, when you see a lot of upward volatility, people of course start to consider cashing in. So of course we take that into consideration. This is potentially one of the reasons why we saw that pullback. It's understandable, but nonetheless we're still above the neutral on the MACD, still above on the RSI. They're still looking at the latest crossover being an upward crossover. Now, people want to take advantage of this upward trend. Some people wait for the breakout. The breakout's very far away. It's another increase of 0.70%. So you're going to miss most of that price movement. So, for example, if we look at a breakout and then trading, it's an increase of 0.65%. So you're going to be out of the market for a very long time. A lot of price movement will be moving upwards, which you're missing. And of course, the price may become overbought at that area and people start to cash in because you were late entering. So it's very difficult to take advantage of it. So what you can actually do, this is an option, is we've drawn a Fibonacci on the retracement, on the sell-off, on the decline. And instead of trading at the breakout, which is 0.65% away, an option is actually to trade at the 61.8 breakout, which is an increase of 0.40. So a much better entry point, ladies and gentlemen. This is something, of course, you can potentially take into consideration. If we switch to the 2 hour and we look at longer term indications, very clearly indicating upward price movement. Very clearly indicating upward price movement. We haven't got indications here of downward price movement on the chart as a whole. The chart goes back to the 19th of February. We haven't got any signals here of sales on the whole chart. Very high above the 75 bar exponential moving average. We are overbought on the RSIs. Bear with me. We've got this on 18. We need it to be on 20. Most likely we'll still be overbought though. We are still overbought. So that's something we need to be cautious about. Still though, we've got indications buyers are controlling the market above the 75. Again, indications buyers are controlling the market. If we switch to a 30 minutes and look at regression channel, we can see the regression channel is widening. We can definitely see we're above the regression channel, so we can see indications here that the price is increasing. So very strong indications of the price increasing here, ladies and gentlemen, for gold. So, ladies and gentlemen, we've been speaking for 42 minutes now. Let's look at our release before we end today's webinar, live stream webinar. By the way, guys, keep in mind that you, of course, can take these last few minutes to ask as many questions as you like. If you have any questions, feel free to ask now. Just a recap, though, ladies and gentlemen, the non-farm payroll figure was extremely high, very, very high, 275,000. It's 75,000 more than expected, so it was very high. The real shock, though, was unemployment rate for the first time in a long time. If we go here, for example, type in US unemployment rate, we can see the last time it was at 3.9%. Hasn't been at 3.9%, ladies and gentlemen, for over a year. So you can see today 3.9%, never been that high in over a year. So we're going actually back to, it's the highest we've seen since January of 2022. So we're going back more than 2 years ago, ladies and gentlemen. So that's definitely something which is negative for the US dollar, can really prompt interest rate cuts potentially. I don't think it's instantly something so negative enough to imminently cause interest rate cuts, but it slightly tips the Federal Reserve in that direction. So, for example, can potentially indicate that a cut may be now in May rather than it being in July. What individuals can also do is monitor the CM FedWatch tool. So, for example, here we've got the CM FedWatch tool, and we can see what the possibilities are of interest rates. So if we now go to May, we can see we've got a 38% interest rate cut. Previously, this was much lower. This was approximately about 20%. Now it's at almost 40%. So this is something to keep on monitoring, because if this percentage point here gets higher, then it can create weakness potentially in the US dollar. So real concern, like I said, was the higher unemployment rate and also the lower earnings as well, lower salaries. So that brings us to the end of today's live session. As always, of course, trade safe, trade responsibly. Hopefully you found today's educational webinar informative and educational. In the meantime, enjoy the rest of your day, enjoy your weekend, trade safe, trade responsibly. Feel free to visit our website. You can, of course, access a lot of webinars, a lot of free educational materials for, of course, without any cost. You can, of course, register as well for free. and we can keep on updating you with new events, new educational material, and so on and so forth. In the meantime, enjoy the rest of your evening, and goodbye.